Join Samantha and Hans at the next Macro to Micro Options Power Hour, held each Wednesday at 4 p.m. Eastern Time. Registration is free. Scan this QR code or click on the link in the description.
We're looking for a bounce. I would say more than that. We're actually looking for a bounce instead of a trounce because we are still very much on pivotal support that could very easily give sway. And we're hoping that we get some consolidation here and then those mechanical buyers, price insensitive buyers start coming in and giving us a short covering rally. That is what we're going to talk about today. And Hans, I know you've done some work on this regard and I just talked about mechanical flows. But otherwise, there really isn't anything calm in the macro event risk side. We have government shutdown potential. We had a cool CPI, which was what I was expecting. In other words, it's actually falling inflation versus rising. So we're kind of still in this deflationary impulse. Equities as well. Jobless claims last week, not so bad. So we'll get another chance to look at those tomorrow morning, Thursday, jobless claims. And then, of course, next week, FOMC. Not a lot is expected. Mostly, Powell has one lever, which is the QT of the balance sheet, the Fed balance sheet, and whether or not they pause that to give the market some breathing room. Okay, 95% chance of no rate cut. We would really have to fall off the cliff, if you will, precipitously for them to pull forward a surprise 25, let alone 50. We're looking at that later on, but I think right now we don't have any policy intervention coming in, and that's the big thing, right? So if Trump was to come out and say, oh, I was just kidding about tariffs, Besant had some power, honestly, in Treasury general account and or ability to intervene. I think he would, but with the continuation, the reconciliation bill that's coming up and pushing the deficit not only to September, the debt ceiling, I should say, but also this expansive deficit is just exactly what Biden ordered last year. So it doesn't help the market. And we've already started seeing money go home. The dollar is dropping. Again, that has definitely cliff dove, and it is for good reason. Re-rating of concentration risk, absolutely chaotic kind of political agenda. And then, of course, money's just going home. They're being incentivized to chase yields abroad, whether that be more Europe promises of stimulus or Japan higher yields. And of course, China is doing a lot to support their capital markets right now and their tech dominance run. So let's talk a little bit about the flows.
Within the derivatives market, we talked about that short gamma, short vega. And so I said, well, and certainly technically some issues there. So I said, well, from a technical standpoint, from a structural standpoint, we've got some, light at the end of the tunnel because we've sort of had a big washout. The RSIs are way overbought if you put much into that. But from a longer term fundamental standpoint, the light at the end of the tunnel may be a freight train, as you said. And I think that's sort of the world that we're in, right? Where we hope, and I'm going to show you guys in a moment how there is a little bit of softening from the vol side of things in some respects, which can make us somewhat positive, maybe to be expected after such a very swift and vicious sell-off. I think the worst on the NASDAQ since 2022, I think it was. So we've had some very quick downward movement. A lot of people have been caught off guard and are having to deal with that, given the complete 180 that we've had from post-election, which was Trump's going to support markets and everything's going to be wonderful, to Trump is literally quite doing the opposite and saying we're going to toss Wall Street under the bus for Main Street, which Main Street's going to feel some pain as well. But this is the sort of mantra, well, we're putting Main Street first. And so it remains to be seen if that kind of works out over time. But we are seeing a little bit of a softening of vol lately. I did notice this week we had a couple days there where the markets were down slightly. The VIX was down. And then again today, we see the VIX down quite a bit given the small rally. I think last I looked, we were up 30 or 40 points on the S&P. So we are seeing a little bit of a relaxation in fear levels. Remember that a VIX 27, 26, I haven't got my calculator handy, but we're probably pricing in about 1.7% of movement per day in the S&P. And that's quite a bit of movement. So if we have if we continue to have some days less breakneck, and I don't know if you noticed the ATR, Samantha, but the ATR was actually hit higher levels on the S&P, that average true range, than we saw in August. So August was that big swoosh down and all the way back. And if you didn't check your statement, you didn't even have to check your statement because it didn't matter. This could be something a little bit more durable versus that V recovery. Could be a little bit more of that rounding bottom recovery and hopefully not new lows. But this is a very different scenario, but we are seeing.
Join Samantha and Hans at the next Macro to Micro Options Power Hour, held each Wednesday at 4 p.m. Eastern Time. Registration is free. Scan this QR code or click on the link in the description. Watch the full Options Macro to Micro Power Hour episode by clicking on the video here and subscribe to LaDucTrading YouTube channel for more content.